Good afternoon and welcome to your weekly FX Options Report. Today is Wednesday, December 22nd, 2010. In this holiday shortened week ahead of the market holiday on December 24th, GDP figures and housing have been in focus here in the U.S. Earlier today, the Commerce Department reported that third quarter GDP expanded by 2.6% from the initial 2.5% reading that had been reported. At the same time, the GDP had been expected to come in at 2.8%. And existing home sales here in the U.S. for the month of November rose by 5.6%, but at the same time, the reading was weaker than the 7.1% that had been expected. Now, in terms of overseas fundamentals, there are press reports that said that China will buy sovereign debt from Portugal, which provided initial support for the euro currency in the morning session. And taking a look at UK figures, third quarter GDP from the UK was downwardly revised to 2.7% on an annual basis from the 2.8% initially reported. And the Bank of England minutes showed a three-way split for the latest rate decision. There was a 7-1 vote to keep rates on hold. And looking at the spot FX market in midday trade, the US dollar is trading on a mixed note. Meanwhile, the euro is continuing to fall to record lows against the Swiss franc. Now, the Swissy hit fresh record highs against the euro and is continuing to see safe haven demand. It has been driving the Swissy higher, especially amidst ongoing debt concerns in the eurozone. Now, one way to trade your views on US dollar strength or weakness is to take a look at IC's FX options. One advantage is that they are US dollar denominated. For more information, you can go to www.fxoptions.com. And in our next segment, which is our daily trend report, let's start out by looking at the AUX. Now, that pairs the US currency against the Australian dollar. And on an intraday basis, that pair is under pressure. The RSI has also struck against its neutrality area at 50% and is reversing to the downside. Therefore, the preference of trading central analysts for the AUX is short positions below 103.75, with targets coming in at 98.25 and 93.50 in extension. Moving on to the BPX, the U.S. currency against the British pound, a rebound is expected. That pair has just rebounded on its support and should reach its next resistance as the RSI is well directed. The preference of trading central analysts for the BPX is long positions above the pivot, which currently stands at 62.50, with targets coming in at 65.50 and 67.50 in extension. For the CDD, the U.S. currency against the Canadian dollar, a rebound is in sight. Technical indicators for that pair show that it is losing downward momentum. Therefore, the preference of trading central analysts is long positions above 99.50, with targets coming in at 105 and 108.35 in extension. For the EUI, the U.S. currency against the euro, a rebound is expected. Now, the pair's RSI is currently well directed, and therefore the preference of trading central analysts for the EUI is long positions above 74, with targets coming in at 77.50 and 79 in extension. Moving on to the SFC, the U.S. currency against the Swiss franc, a rebound is expected. The pair is pulling back on its support right now, and the preference of trading central analysts for the SFC is long positions above 94.25, with targets coming in at 100.50 and 102.50 in extension. Last but not least for this segment, let's take a look at the YUK, the US dollar against the Japanese yen. Now, for that pair, caution is advised. It has rebounded on its support and the RSI is currently mixed to bullish. Therefore, the preference of trading central analysts for the YUK is long positions above 82.45, with targets coming in at 86.30 and 89 in extension. Moving on to your weekly trend opinion, let's start out by looking at last week. Now, the US dollar did continue to gain against the major currencies, but it is currently still challenging key levels. In terms of portfolio performance, it is unchanged from the prior week, with the portfolio being up by 1878.46% since its inception, which was in August of 2007. And since the beginning of this year, January 2010, it is up by 598.36%. We do have two trade alerts for you right now, including calls on the CDD and puts on the GBP. Now, starting out with a look at the calls for the CDD, trading central analysts do recommend that because it is rebounding on its support and is expected to post a further up move. Also, the daily RSI for the CDD is breaking above its declining trend line. Now, regarding the puts on the GBP, that pair is breaking below its support and is expected to face further weakness. Two other pairs that trading central analysts will be watching for this week include the EUI and the YUK. Looking ahead to next week, the final week of 2010, volume and volatility are expected to be fairly light. At the same time, Trading Central analysts will be keeping a close eye on the AUX, the SFC, the PZO, and the SKA. Now, they will be looking at the AUX because it is seeing strong support at the 98.25 level. For the SFC, it is pulling back sharply on its support at 94.25, and a break below that level will call for further weakness. And regarding the PZO and the SKA, it does stand above its support levels and is currently expected to post a rebound. And the daily RSI for both the PZO and SKA do remain well directed. And that does wrap it up for today's weekly FX Options Report. Make sure to tune in next Wednesday for your latest update. Thanks for watching and have a great week.